Well, if you look at all the on-chain data, basically retail sentiment has been dying, like just in a straight downtrend for weeks or months. I think definitely things like UST or Celsius definitely amplify the damage, and all the fiasco about stake it, the pegging. Basically Celsius, like they hold about $10 billion in their assets, right? But because they're a C5 company, we don't really have a transparent picture of their financial position. But people do try to track their wallets on chain, and so we manage to track about 1.5 billion positions, so we can see everything on chain, right? That liquidation price and whatnot, and you can see that ETH holding right now, at least on chain, like they only have about 30% in liquid ETH. The rest is in stake in ETH2 or in stake ETH, and that stake ETH is kind of illiquid in a way because they hold such a big position that much bigger than the liquidity pool on Curve, and so if they're gonna have to liquidate it to meet clients' redemptions, that means a lot of losses for them. So right now, it's an interesting position for them because on one hand, you're not going to get a scenario where it does spiral to zero, right? Because stake ETH works in a very different mechanism. Eventually, once the merge happens, once redemption happens, you can always, redeem it back one-to-one. So right now, it's more about short-term liquidity risk, smart contract risk, and so on. But obviously, already you can see on chain that they do leverage the position. So depending on how much leverage they have, the higher the risk is, and that's what we're seeing.